I really have a strong feeling that we're right at the edge of starting the next move in the metals. I think it'll be by the end of this year. I'm looking for gold to break that 2,000 barrier that it's hit 3 times, and I'm looking for silver to follow quickly thereafter. I'm also looking for perhaps, and this is an educated guess, sometime between now and the end of the year, we might get a hint of the supply issues from officialdom. It'll be benign and it will be vague and it will be couched in the right adjectives. But, well, we may have to start looking differently at the silver supply at the CME because we've noticed a great deal of investor interest in the metal, and yet
gold prices rose on Tuesday, supported by a softer dollar. At the same time, investors awaited U.S. retail sales data that could have a bearing on the Federal Reserve's policy outlook as inflation shows signs of cooling. David Morgan, founder of the Morgan Report, believes that we are on the brink of a significant metal market movement. He expects that by the end of this year, the price of gold will finally break through the $2,000 mark, which it had tried to do 3 times before but failed. He also predicts that silver will quickly follow gold's lead and increase in value. In a recent interview, Morgan highlighted precious metals' value and role in setting prices. He emphasized that when one owns gold, they can influence the price by holding onto their gold instead of selling it back to dealers. This means that individuals who own gold can set the price themselves by deciding when and how to sell it. It's like having control over the value of your assets. Morgan also expects the subsequent significant rise in cryptocurrencies will be driven by gold and silver-backed digital currencies, enabling individuals to spend their holdings directly and convert them to fiat currency through crypto agents. Crypto enthusiasts now view digital currencies as better money. They may, over time, come to trust gold-backed cryptocurrencies more than even the U.S. dollar. Regarding the silver market, David Morgan believes the silver market currently operates at approximately 1 billion ounces per year. Mining contributes around 850 million ounces of this supply, while recycling adds about 150 million ounces. Morgan believes the silver market will not significantly increase beyond this level due to depleting mines, declining grades, and rising energy costs. He suggests that if 2 years' worth of total silver supply were to enter the market, the price of silver would likely increase substantially. This is because the current supply of silver is relatively limited, and a sudden increase in supply would likely overwhelm demand. Now, let's watch excerpts from David Morgan's interview with Liberty and Finance. Be sure to watch the entire video and consider subscribing to our channel. Remember to enable post notifications to stay updated on our latest uploads. Thank you, and enjoy the video.
The idea that I talked to you about off air before we started was that when you purchase precious metals, you get what you pay for. Now, people always, almost everyone, yours truly included, when I think of my stack, I think of what is it worth in fiat, But really, if he who owns the gold makes the rules and you own gold, then you can basically set the price with your gold. In other words, you don't have to necessarily sell it back to the dealer if you want to purchase something. So I was asked that question so many times, and so was in the early days James Turk. And I was interviewing with him one time, and he said, well, David, we're going to spend it. And that was early on in the days of gold money when you could actually do gold money transfers peer-to-peer. And this is what's taking place now. And I've made the bold statement, will be proven right or proven wrong, that I think the next major leg up in the cryptocurrencies will be the gold and silver backed ones. Because this is the only way to do what you outlined. If you go to the merchant with a debit card and you're spending silver out of your account, they don't give a darn because it goes through the banking system as is, and it's only on the back end where total settlement occurs, where your crypto agent takes the silver out of your account and turns it into fiat of the day, be it pesos or rubles or yuan or US dollars or Canadian dollars. And this is available now, and it's available through a few gold and silver backed cryptos. I'm associated with Load, so I'm biased. We don't have our debit card yet. We had a virtual one that worked fine, and then that got taken out because of the change with the system. But we should be putting a debit card with the Load program within the next few months. And once that occurs, you can spend it out. And you can also save it. I look at the whole crypto currency market using gold and silver as an adjunct to the overall system. So the silver market right now is a 1 billion ounce per year market. 850 million mined and about 150 million ounces recycled, round number 1 billion. And it's probably not going to get much above that based on how these mines are depleting, how the grade is falling off, how energy costs are still going up. I know they're flat now, but they'll continue to go up longer term. And also the resource wars that we're already starting to see, where if this lithium is in my country, it's my lithium, that kind of thing. You're going to see more and more of that. So if we take that premise of the 5 trillion, 1% being 50 billion, if you think in this next go around with the financial crisis that we are in, but will accelerate, that 1% of that money doesn't go to the silver market, then maybe I'm sending you on a fool's errand. I think it's almost guaranteed that at least that much money would come to the silver market. And think about what happens when 2 years worth of total silver supply comes into the market. Where do you think the price of silver will go then? I'm talking about investment demand. I'm talking about what most people that aren't, sociopaths or psychopaths, look at money as a means of freedom and a means of security, primarily security.
Moving forward, David Morgan highlights the hypothetical scenario in which the BRICS currency gains significant recognition in the marketplace, and the price of gold is pegged at a higher value, such as $2,500 per ounce. He emphasizes the potential arbitrage situation if the market realizes holding gold in the BRICS currency is more profitable. The BRICS alliance will meet in August to jointly decide on forming a new currency to challenge the US dollar. The next summit will be held in South Africa, and a rival currency to the US dollar could be born. The American economy could face hardships if the new tender gains the trust of the international markets. BRICS could return to the gold standard form of reserves and end reliance on the US dollar. The move could put the US dollar under pressure and narrow its path to fund its deficit. The supply and demand dynamics favor the greenback but could take a U-turn if BRICS launches a new currency. Morgan believes that despite the initial momentum and availability that the BRICS currency might have, the US dollar still maintains its dominant position in global trade settlements. The existing system heavily relies on the US dollar for trade, and most global debt is denominated in US dollars. While the BRICS currency could present a potential challenge, Morgan suggests it will likely replace the US dollar for a while. Let's get back to the interview.
So now we're faced with what is in front of us, the BRICS. And it depends. First of all, it's got to gain momentum, and it probably will, first initially, just because it's available. But the trade settlements that are required for the world at large is still the US dollar. I mean, all the debt that's out there is primarily in US dollars. Of course, there's debt in other currencies, but the lion's share is the US dollar. And a lot of foreign currencies borrow dollars to do whatever, improve their infrastructure or pocket it or whatever has been done with a lot of this foreign aid. And so that settlement, I don't think, could really be transferred over to like the BRICS currency with some huge, increase in the price of gold, for example, because if there were a change where it was notable in the marketplace that this BRICS currency, gold-backed, peg gold at 2,500 the ounce US, that would be a huge arbitrage situation for anybody holding gold. And one thing the markets are very efficient at is using an arbitrage to their advantage, and then it quickly disappears. So you might see a flood of dollars moving into the BRICS currency because I'm getting paid more for my gold, and that's what I want, and presto changeo. But the market will adjust. So I really don't see how it's going to play out. It may play out very well. Maybe it will replace the dollar. I highly doubt that. Certainly, it's a disruptor. And I think from my perspective, the most important part about the disruption is thinking, getting us all to think about, why is the dollar the supreme currency? What are the alternatives to it? Does another nation state or group of nation states have the ability to supersede it? And those type of things. And again, it's a work in progress. And the last comment, a little off topic, but at the end of great inflations, you always see alternatives. That's why you see so much in the crypto space. It's an alternative to the current system. Gold and silver obviously are outside the current system. This BRICS will be outside the current system. So the market actually will compensate for, let's say, things that are needed. If you need a stable currency, or you need an alternative currency, or you need an alternative method of payment. And the worst thing about this whole topic, in my opinion, is that the U.S. weaponized the dollar. I mean, you might have a justifiable case against another country. I don't think there is one currently, but regardless. But even if there was a justifiable reason to go to war, you do not mess with the overall financial system. That's sacrosanct. Everyone should be able to pay. So when Russia was cut off, they couldn't pay their bills in US dollars to countries that needed to be paid their interest payment or what have you. And that was not the fault of the Russians. That was the fault of the United States cutting them off. And this has basically backfired. So, what goes around comes around. I mean, maybe this BRICS idea going full bore and producing a new currency would never have occurred if we basically abided by the rules, meaning us, the U.S.
The price of gold and silver is expected to increase in the coming years. This is because the demand for these precious metals is increasing while the supply is limited. Gold is seen as a safe haven asset, meaning that its value tends to increase during times of economic turmoil. Silver is also a valuable industrial metal, and its demand is increasing as the world's economies continue to grow. What do you think about the future of gold and silver prices? Do you agree with David Morgan's predictions? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.